More Business Briefing right now on FM News 101.
Well, the political hot potato in 2016 is Oregon Initiative 28. If you're a business owner or executive and you're not already informed, we've got you covered. I sat down with one of our local experts, Earl Thomas at Geffen Mesher.
Oregon Initiative 28. Earl, this is a hot button among business owners across the state of Oregon. We're going to spend time here breaking this down. First of all, stable datum for all our listeners out there. What is this initiative all about?
The initiative is designed to generate $5 billion in new revenues that would go to K through 12 services to senior and healthcare in Oregon.
Okay, so good intentions. Who's sponsoring this?
There's a group called Our Oregon, which is a left-of-center activist group. They have sponsored several initiatives in the past, all using what I'm going to refer to as a divide and conquer approach, dividing us and them. Us being the people of Oregon, the teachers, the unions, the school teachers, and them would be wealthy individuals, and wealthy is anyone who is not poor, and out-of-state corporations, and corporations in general. A corporation is not a person. It doesn't have feelings, so they have consistently gone after corporations.
Tell us, what would this ballot measure do? We're hearing a lot out there. There's a lot of chatter about this. I know some of our business owners have had a chance to dive into it. Many of them catch the headlines. Give us the download.
Oregon has the concept of a minimum tax. That is the absolute lowest tax that a company, a corporation, will have to pay without regard to profitability. What this ordinance would do, what this ballot measure would do, is to would base the corporate minimum tax not on income, but on revenue. So the more revenue a company has in Oregon, the higher the minimum tax.
Without regard to expenses, outflow, anything like that. So you put up you make $1 million, but you spend $999,000, you're paying on $1 million, right?
It's basically a sales tax. It's based on the total revenue without regard to any deductions or exclusions.
This is not good. Those of you just joining us on Business Briefing, Earl Thomas, a senior manager here at Geffen Mesher, giving us the download, if you will, the overview of Oregon Initiative 28. We're going to be hearing a lot more about this. So let's talk about the tax increase, the hit here. How large would this be?
Well, it would be the largest tax increase in history. For example, a company that has $40 million in gross receipts and $4 million in losses, historically, they would pay $30,000 as a minimum tax. With this new initiative, they would pay $405,000 on the same revenue. That is a 1,250% increase.
Even when they lost money, they pay the tax.
Even when they lost money. The tax, which is basically 2.5%, is just as high as the profit margin, the net margin of many companies. When we look at some of the big companies in Oregon, Barnes & Nobles, they had a 0.2% net profit. Kroger's 1.8%. Walmart is only at 3%. And our Oregon group wants to do is tax that at 2.5%.
This is huge, and we can talk more about the ramifications of what this does or doesn't do for business in Oregon. But you mentioned this would be the largest tax increase in Oregon history. I know you're talking to a lot of business owners out there, executives, and we've heard time and again in Oregon those threats of moving out of the state. But if there is one initiative, if there's one thing I can see coming down the pipe, if this passed, we would probably see an exodus of business from Oregon.
Well, we already see companies are looking to to relocate if necessary. We also have a number of states, such as Texas, approaching our clients to move to Texas. Texas has a low tax, low tax and no tax states, and they are aggressively courting Oregon companies.
Even across the river, and I know for personal income tax reasons, many Oregonians strategically will move to Washington when they retire to avoid Oregon state income tax. Now, in Washington, as a Washington resident and business owner, we are subject to B&O tax, and we know that, and we've been paying that for years. How much of an impact does that have in comparison to this? This is kind of a bonus question because it's already built in. We're used to it. That's nothing compared to what we're talking here, right?
That's true. The Washington B&O tax is nothing compared to the proposed 2.5% minimum tax here in Oregon.
Well, who's against this now? And I know our business owners out there who are hearing this are hopefully pulling off the road, not driving right now, because this is not good. Who's up against this?
Almost everyone who would not be a recipient of the additional revenues would be against it. Also, voters typically don't understand the importance, the relevance of this big tax increase. And all they hear is, let's tax the out-of-state corporation. Well, the out-of-state corporations would be affected, but most affected would be our local businesses, those businesses that we use every day, Staples, Home Depot. Those are the companies that would be adversely affected. And as a result, prices will likely go up, which means that we will all be adversely affected.
Yeah, it's one of those, it's not a trickle down, it's a direct impact of, hey, if we're doing business in Oregon, it's going to cost us more. So, hey, if we're going to stay here, we're going to have to jack our prices. It's basic common math. You don't have to be a CPA to figure that one out, right?
No, you don't have to be a CPA to figure that out. All you have to do is have the information that the Our Oregon group is not putting out there.
Okay, that's good to know. Earl Thomas, Senior Manager here at Geffen Messer, joining us with information on Oregon Initiative 28. Boy, this thing's ugly. So from a client perspective, I know that's what we count on you for, is to kind of give us that insight. What do you tell your clients in a situation like this? Because it's tough enough running a business, okay? Day to day, employee issues, manufacturing, machines down, everything that business owners deal with already. And then you get this layered on top of it. And, live in a great part of the country, well, enjoy the great Northwest, and native Oregonian here. So all of that said, you see this kind of stuff, and first of all, it upsets you, and then you're calling your advisors, you're calling your CPA, and you're saying, Earl, if this thing goes through, what are the scenarios? So talk us through that. What does this look like?
Well, the tax would be imposed on Oregon sales. We can't do much about our Oregon sales. The sales are what they are. What we have to do is structure transactions to minimize the Oregon sales, perhaps move out of the state and remove the direct connection between the sales and the state of Oregon. There are ways to do it. It depends on the nature of the business, and we have to look at each client on its own facts and circumstances.
Well, that's a great way to answer that, because you're right. It depends on the business. It's going to depend on transactions and so many other things. But this is not good. This is not good for business in Oregon, and I appreciate you kind of bringing us up to speed. What's the timeline on this? I know this initiative process. What are we looking at in terms of when and if things happen here?
Well, the vote will take place in November. And the tax would be, if approved, the tax would be effective for tax years beginning on or after January 1st, 2017.
And if you'd like to learn more, get in touch with Earl Thomas at Geffen Messer. They've covered this thing from pretty much every angle. When we come back, we'll wrap up this hour of business briefing with a trip to Palm Springs.